Everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And so there's debt everywhere you look. There are a lot of huge problems with student loans, with pension funds. Well, we've gone through all this before. And there's this article out of Courts that I wanted to kind of go into here. And as the article says, the $1.3 trillion loan market that's spooking everyone right now. And as the article goes into, the International Monetary Fund has decided it's time to sound the alarm about leveraged loans. It's a $1.3 trillion global market comprised of debt built up by companies in precarious financial positions. The IMF expects a global issuance of these loans to companies that are either heavily indebted already or have weak credit ratings to be around $750 billion this year, after a record $788 billion in 2017. 10 years after the global financial crisis, investors are once again showing increasingly risky behavior as they search for sources of high yield in response to a decade of low interest rates enacted by central banks in response to the crisis. The largest market for leveraged loans is the US, where industries including technology, energy, telecommunications, and healthcare are using the debt to fund mergers and acquisitions, buyouts, dividends, or share buybacks. And I quote, "In other words, for financial risk-taking rather than plain vanilla productive investment," the IMF says. The IMF added that the most highly indebted speculative grade firms make up more of the new issuance of leveraged loans than they did before the financial crisis. Meanwhile, there are fewer investor protections known as covenants in new loans. These covenant-light loans make up 80% of new loans arranged for non-bank lenders, up from about 30% in 2007. To make matters even worse, the quality of covenants has deteriorated, the IMF added. This week, U.S. Senator Elizabeth Warren sent a letter to regulators laying out concerns about falling underwriting standards for leveraged loans, warning that they create a significant risk to the U.S. economy. And I quote, "I am concerned that the large leveraged lending market exhibits many of the characteristics of the pre-2008 subprime mortgage market," she wrote. Well, even Pocahontas is right from time to time. Anyway, going on, Janet Yellen, the former chair of the U.S. Federal Reserve, has also recently added her voice to the warnings. Yellen said there had been a huge deterioration in lending standards and was worried about systemic risks associated with these loans. It's particularly troubling because it's happening at a time when bank regulation is being relaxed, she said. These loans could bankrupt firms in an economic downturn, making it worse. And I quote, "You are supposed to realize from the crisis, it is not just a question of what banks do that imperils themselves. It is what they do that can create risks to the entire financial system," Yellen said last month in an interview with the Financial Times. That lesson, to me, seems to have been lost. Also last month, the Bank of England said it was also concerned about the increase in leveraged lending, saying that global market is larger than and growing as quickly as the US subprime mortgage market was in 2006. Issuance in the UK hit a record last year. The Bank of International Settlements, meanwhile, warned that characteristics of this market make it vulnerable to additional risks, such as its relative liquidity. The growth in the leveraged loan market is part of a boom in collateralized loan obligations, CLOs. This is a form of securitization in which leveraged loans are pooled together and then divided into tranches. They are something like a cousin to collateralized debt obligations, the assets that blew up spectacularly during the global financial crisis. CLOs are deemed safer because they made it through that crisis relatively unscathed. But like with the debt that underlies them, the standards attached to CLOs are weakening. Bloomberg recently warned that the market has gone too far. Now these risky assets are targeted at individual retail investors. What's more, there are concerns that existing regulations don't sufficiently protect against the risks of leveraged loans and CLOs, which are often being built up by non-bank lenders. And I quote, having learned a painful lesson a decade ago about unforeseen threats to the financial system, policymakers should not overlook another potential threat, the IMF said. So let's go into this a bit with John. I find it interesting. We have people that shouldn't sound like us, sounding like us, warning about these issues, which tells you the times we're in, where we're getting so close. They want to, save their reputation going forward, so they'll say things that are true in order to, when it all comes down, they don't end up like, Ben Bernanke saying that everything was great in 2007 and we're going to be successful long into the future. Some of these elites are starting to kind of learn from their past mistakes, and this time it's like, yeah, there's a problem coming. They won't go into the whole truth or why it happens, but they'll admit that there is a problem happening nonetheless. John, can you go into this story and this massive amount of debt and loans and insanity that's going on right now?
Yeah, Josh, it's very insane, like the amounts of debt around the world. And this is just a tiny, we're talking about $1.2 trillion of leveraged loans. The thing with leveraged loans is that you actually leverage on top of something. So you're taking out a loan and then you put it into, as you said, share buybacks, which is just basically manipulating your share price so it looks better, and other schemes that are out there. What is really crazy is I'm looking at the chart in this article, Josh, that shows the outstanding CLO market, and this is the underlying debt that's attached to the CLOs, and that's at $500 billion. $500 billion. Remember the underlying debt that crashed the whole world economy was 13 point something billion dollars back in the time when you had all those bad mortgages. We're talking about above $500 billion in the CLO market, the collateralized loan obligation market itself, that have been leveraged, and then borrowed, as they said. Now they're going after retail investors because, the people that have, issued these CLOs, they have siphoned out all the value out of it. So now we got to give it to somebody. You got to have somebody that holds it at the end. That is going to be the people that are losing. And of course, this happened, with the CDOs, where you had Norwegian and a whole bunch of other pension funds around the world blowing up because they held these collateralized debt obligations that was backed by all this subprime debt that was issued, of course, by American real estate sector. So you're looking at a whole wide array of all this mass leverage in the world. And of course, I got to get back to my I think this is the right timing to do this. I've been working day and nights lately on trying to get all this debt information out to people that are pulled out from the Bank of International Settlements. And I found it, maybe it should be a little bit of interest to people of where is the risk of their lending of the different banks in different countries. I just want to go quickly through it, Josh, so people can see where the dangers are. And then, of course, they can find my information in the link that you can attach here, Josh. But I just want to show where the biggest risks are for banks and where they borrow their money to international investors around the world. For example, U.S. banks, their top three risks are the United Kingdom, Cayman Islands, and Japan. And then you have Canadian banks. They have the United States by far is the biggest risks of Canada, so that's not very good. And then you have the United Kingdom and Japan. Then you have Australian banks, and New Zealand is their biggest risks, where actually the New Zealand stock market is in a massive bubble right now. So that's huge problems for Australian banks because they borrowed lots of money there. And then it's USA and UK. French banks have borrowed massive amounts of money to the US first, then Italy, and then UK. You have German banks that borrowed most to the United States, the UK, and France. Then you have German banks that borrowed to the United States, to Cayman Islands, and to United Kingdom. That's their top three. Switzerland, United States, United Kingdom, and the West Indies. Then the UK, you got the United States, Hong Kong, and Germany. And then I got two last ones here. That's Italy, it's Germany, Austria, and France. And then you have the last one, which is Netherlands that I have right now. I'm going to upgrade this, put more countries. But the Netherlands have the United States, Germany, and the UK. what is interesting here, Josh, the biggest countries that are being borrowed to is the United States and the United Kingdom, and Cayman Islands comes in third almost among these countries. So it just shows you how everybody has mass amounts of risks towards the United States, towards all those leveraged loans that you have in the collateralized loan obligation market. So everybody is connected here. There's a massive web of debt worldwide where all these banks have huge risks with other countries. So they're on the hook when one country's banks goes bad and their asset falls apart. Well, so does all these other banks in other countries because they borrowed mass amounts of money to those countries. So it's just a massive, huge risk out there to so many different countries that have, of course, the main risk is in the United States and the United Kingdom that have issued the most amount of debt in the world right now. But you can see this, Josh. It's not a good sign of the times that you have all this debt. You're looking at just a vast amount of indebtedness around the world. And as they said, the underlying assets that are under this is starting to become worse and worse because you're reaching that debt saturation point in the world economy where there's no more debt to actually be pushed in to pay off that interest that doesn't exist when you actually borrow money. That interest that you owe doesn't exist, so you got to pay it back, but then you got to add more and more debt on top of it. So it's just exponential growth scenario worldwide, and this is what's shown with the research that I just recently did on all the debt in the world, is that we're coming to the precipice where there's so much debt that are been created around the world, but the problem is it's becoming so saturated, all these markets and all the debt around the world, that it's becoming unsustainable. So it's at the point where they got to go into all that bad debt, all that subprime, all the junk debt and so on, and then to get any yield, first of all, because central banks have manipulated prices down so far. But then on top of that, they got to actually just borrow money to people that can't afford to pay it back because they have to keep the system afloat, Josh.
It's interesting that countries get into massive amounts of debt and then force that money onto the indebted populace, yet they are dependent on people's debt, so they want individuals within the country to get into debt, but then they're still dependent on, well, the money, the people end up paying for it. It's the same way either way. It's like the country is in debt, people pay for it. The people are in debt, the people pay for it. It's all an enforced structure of dependency that is being forced onto the populace. This idea that, hey, if you are in debt, if you are completely dependent on the system being in debt, then you are a good slave. You are a good puppet. You are a good person to use and drag around the mud with the chains you revere. And I mean, I think that it's very telling when we have this massive issue around the world. And also they don't mention, the multi-quadrillion estimated dollar, derivatives bubble worldwide. I mean, everywhere you look, there's manipulation, there's centralization, there is debt, there's derivatives, there is one way or another to screw the populace. And again, like the government is massively in debt, and then the populace is massively in debt, and it always goes back and rests on the shoulders of the populace. And we're seeing that with student loans, we're seeing that with car loans. I've seen places that will say like last chance or second chance loans or something on the building, and it's like, yeah, so you get a loan to pay off a loan to pay off a loan that you got before. It's like it's just infinite circle of debt and complete just servitude. Really, it ends up in complete servitude. I think that it's very telling that this is starting to kind of emulate to the point where, like I said at the beginning, you have a whole bunch of major elites or, people like Janet Yellen who helped destroy the economy alongside all of her other cronies at the Federal Reserve. And then people like Elizabeth Warren, who loves centralization, who loves big government, who loves organized crime, because she's part of it, also warning of this issue. And meanwhile, you still have those people that will say fake news, fake news. Well, even when these same people that cause a problem in the first place are warning about it, it's about time that we start listening as individuals, because they are trying to avoid, the criticism later on, and they want a career down the road. It's the same reason why they bash people who like gold and silver, bash people who like crypto, but then they gather it themselves. It's like JP Morgan saying, Bitcoin is criminal money, and then Bitcoin falls in value after the news of them saying that comes out, and then JP Morgan buys up a bunch of Bitcoin. I think this is the kind of way that they operate. I think they're trying to adapt to new times. I think they're trying to adapt to the age of information, which is becoming more and more prevalent no matter how much they try to muzzle the rest of us. And for that reason, we have to be even more vigilant, because if they're getting smarter, we have to get smarter. And I don't think it'll be a big issue, because government is always wholly inefficient, and the populace, a free market, individual demand always prevails long term. John, let's talk about the bottom line here going forward, what this all means.
Well, the bottom line, Josh, is that, of course, this whole debt bubble is continuing because even that they stopped doing the quantitative easing stuff where they buy up all the debt off the banks, they're still actually letting the banks print mass amounts of money, because what they do, the government is doing mass amounts of deficit spending around the world. And then if you put that into the banking system, now they could create a minimum of 10 times more money. With zero reserve policy, you can just create as much as you want, but they can just create so much more money now because there's even more money available, even though that they've said that, oh yeah, we're not doing any easing or trying to fix the economy, everything is fine. But meanwhile, they're spending, the US is spending about $1 trillion in deficit spending. Well, you could put that into the banking system, get another 10 trillion. Now you're just seeing where this is going. It's just going to mass unsustainable to territory. Like, we're never going to pay back this debt ever. And the Keynesians said, like, yeah, we're just going to continue to print more money in order to, devalue the debt constantly. But it comes to a point where the general populace, the economy is not able to cope with it, because the wages are not going up fast enough, and you're not able to control the economy as these economists wants to do, Josh. So what's going to end up happening is at one point people, and you see in the United States, they just recently said that, the inflation is ramping up in the United States as well, because you're seeing people are getting better jobs back. Things are going to cost more in the United States, but you're seeing that all across the world, where people are having less and less money because their economy is not following up. But businesses are not raising the wages and all this stuff, and you're just getting a massive lag in the economy where they can't just continue on printing so much money. We're all going to be, it's so funny how they're saying, yeah, so many more people are going to become millionaires or billionaires over the years. The reason why all this is happening is because we printed so much darn money. It's not that those people have become so much more wealthier. They have about the same amount of...
just add zeros to every number.
Yeah, they have about the same amount of assets that they had, but their assets are... they're just taking so much more money because we printed so much more darn currency into the system that it's becoming unsustainable. And you're seeing that the poor and the middle class are falling behind massively. Meanwhile, the elite is using all this newly printed money to buy more assets, to gain more power, and that's why you see income inequality all across the world. It's not because the government is not taxing people enough. It's because the central banks and the government is going into so much debt, creating so much more currency into the system. That is what creates income inequality, not the policies of the government in itself. It's just this mass amounts of printing, and then of course, the people that have access to this debt so cheaply, they are the ones that, go out and buy the assets because they're smart. Meanwhile, you have other people, the poor and the middle classes, going out and using credit cards, 19 to 20%. 5%. Yeah, it's just a massive failure, Josh. These banks are looting you. And then
also, they are taxing people too much as well. Well, in general, they're just stealing a lot of people's money, and they're regulating markets, restricting free markets and individual demand, propping up companies, raising prices in that way as well, but most notably through inflation. It's a horrible, horrible circle, and it's just a perpetual circle that goes on forever as long as we aren't vigilant and educated. We need to be educated, and that's what it's all about here at WHAM. It's about understanding these issues that scare us and then providing solutions for those issues that scare us, so we shall no longer be scared. So we shall look forward with great, great ambition and know that we are striving for success, and we will survive this. We will get by it. And of course, when populace is in debt, a populace is in total servitude, and these banks are bankrupt, and people are just falling into this trap, and we can't allow it to happen anymore, especially, like I mentioned earlier, in this age of information where we have access to all of this, and we are able to succeed and prevail. And I mean, instead of millionaires based on fiat, legal tender law crap, inflation, we'll have, you know, Bitcoin heirs and, you know, I don't know, what you might call gold heirs. It might come out with like a new
whatever
coin,
currency or a commodity, whatever we use as
competing
medium of
currencies.
exchange.
Yeah, like real competing currency system and free market and individual demand and the demand of the populace, and a company does something stupid and people go on to another company at better price, better product, all that kind of stuff. Anyway, we're running out of time. I've been doing these videos now for, let's see, almost 4 hours straight today, hence me like sweating in front of my lights here. It's killing me. So we're gonna wrap it up, but as always, those solutions are food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Gold and silver as preservation of wealth insurance. This isn't investment advice, this is opinion, but nonetheless, it's historic, and we must look at ways to protect our purchasing power. It's a great way to prevail as a free human being, independent, self-sustainable, and financially responsible. For responsibility is a hallmark of freedom itself. And of course, decentralized cryptocurrencies that have sound fundamental value, and the blockchain infrastructures that are also creating a new future, alternatives for all these organized crime systems that we've been enslaved by for far too long. This is a monetary revolution. Speak loud, be loud, decentralize everything, rule yourself. And again, as always, thanks for joining us today. Be independent, people. Stop being dependent on the people that are dependent on the dependence of the populace. You heard me right. Anyway, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line YES, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.